Life insurance. Okay. It's probably something you've thought about. Maybe you're new to it. Maybe you're weighing term versus perm.
Or maybe just putting it off.
Exactly. Putting it on the back burner. So today, we're doing a deep dive focused on one real question. What's the actual financial hit if you wait to get life insurance? We've been looking at some insights from Diversified Insurance Brokers to help unpack this.
Yeah, and the idea isn't to, pressure anyone. It's really about understanding the timing, the financial side of things.
Just getting a clearer picture.
Right. What happens to the cost over time?
Okay, let's get right to it then. Why does waiting usually end up costing more money down the road?
Well, mostly it boils down to two things: age and health.
Okay.
As we get older, statistically, the chance of health problems goes up. Insurance companies, they price that risk in. So older you are, generally, the higher the premium.
Makes sense.
And, the other thing is, health can change unexpectedly at any age, really. That could make getting coverage later tougher or much more expensive or maybe even impossible.
Right, so it's that combo of just getting older and life's unpredictability.
Precisely.
Now, what about people thinking, okay, I'll start with term insurance, coverage for a set time, and maybe convert later to permanent. What's the financial catch there if you delay the permanent part?
That's a really crucial point. Term insurance is great for some situations, absolutely. But if permanent coverage is your long-term goal, delaying that decision, it can cost you big time.
How so?
Because when you convert from term to permanent, the cost, the premium, it's based on your age and your health then, at the time you convert.
Not when you first got the term policy way back when.
Exactly not. So, yeah, that usually means a pretty significant jump in what you have to pay.
Okay, to make this really concrete, we've got this case study from North American, right? Shared by Diversified Insurance Brokers. Can you walk us through the numbers?
Yeah, sure thing. So imagine a healthy guy, 45 years old. He wants $250,000 of permanent coverage. Let's say it's an indexed universal life policy, an IUL.
Okay, what's an IUL again? Quickly.
Right. It's permanent insurance, so it has the death benefit, but also potential for cash value to grow, sort of linked to market indexes.
Got it. So he buys this at 45. What's the cost?
If he gets it right then, at 45, his premium is about $2,143 a year, roughly.
Okay.
And if he keeps that policy, say, until he's 95, that's 50 years. The total he'd pay in premiums is around $107,150.
$107,150. All right, that's scenario one acting now. What if he waits? Starts with term.
Okay, scenario two. Same guy, 45. He buys a 20-year term policy instead. Much cheaper initially, right? About $415 a year.
Yeah.
Over those 20 years, he pays, let's see, $8,300 in total for the term coverage.
Okay, $8,300. Then what?
Now, he hits 65. The term policy ends. He decides, okay, now I want that permanent $250,000 IUL policy.
But he's 65 now.
Exactly. He's 20 years older. So that annual premium for the permanent coverage is going to be way higher for the next 30 years, from 65 up to 95.
And the total cost in that scenario?
Well, you add the $8,300 he already spent on term, plus the much higher permanent premiums from 65 to 95. The grand total comes out to around $140,950.
Wow. So let me get this straight. $140,950 if he waits and converts versus $107,150 if he just bought the permanent policy at 45.
That's right.
That's, what, $33,800 more?
$33,800 just by delaying the permanent coverage purchase.
That's a huge difference.
It really is. And, it's not just about the premium cost either.
Wow. What else?
Well, with permanent policies like that IUL, there's the potential for cash value growth we mentioned. Buying earlier means that growth potentially starts sooner.
Right. More time for it to accumulate.
And just the peace of mind factor, getting that long-term security locked in for your family earlier without worrying if your health might change later.
So the main takeaway here, drawing from Diversified Insurance Brokers info, it really seems to be act sooner rather than later. It can save you real money.
That's the essence of it, yeah. You lock in potentially lower rates when you're younger, likely healthier. And this example just shows how substantial those long-term savings can actually be.
Yeah, clearly. So wrapping up, delaying life insurance, especially if you think you'll eventually want permanent coverage, often leads to a much higher total cost. We saw an example where it was, well, tens of thousands of dollars difference.
Over $33,000 in that specific case.
Makes you think.
It does. And maybe that leads to a final thought for everyone listening. How important is that future financial security in your plans? And, could locking in life insurance sooner fit into achieving that security? It's definitely worth considering how this applies to you personally.